Yerolit Perez is an experienced multimedia journalist and fact-checker with a Master of Science in Journalism. When opening a brokerage account, an online broker such as Charles Schwab or Fidelity will ask you about your investment goals and what level of risk you're willing to take. Full-service brokers, as the name implies, give the full range of traditional brokerage services, including financial advice for retirement, healthcare, and everything related to money. Still, traditional brokers justify their high fees by giving advice detailed to your needs. Discount online brokers give you tools to select and place your own transactions, and many of them also offer a set-it-and-forget-it robo-advisory service. As the space of financial services has progressed in the 21st century, online brokers have added more features, including educational materials on their sites and mobile apps. In addition, although there are a number of discount brokers with no, or very low, minimum deposit restrictions, you may be faced with other restrictions, and certain fees are charged to accounts that don't have a minimum deposit. This is something that an investor should take into account if they want to invest in stocks. Their mission was to use technology to lower costs for investors and streamline investment advice. Since Betterment launched, other robo-first companies have been founded, and even established online brokers like Charles Schwab have added robo-like advisory services. Also, as the success of index investing has shown, you might do better with a robo-advisor if your goal is long-term wealth building. If you're on a tight budget, try to invest just 1% of your salary into the retirement plan available to you at work. If you have a 401k retirement account at work, then you may be investing in your future already with allocations to mutual funds and even your own company's stock. In other words, they won't accept your account application unless you deposit a certain amount of money. Some firms won't even allow you to open an account with a sum as small as $1,000. It pays to shop around some and check out our broker reviews before deciding where you want to open an account. Others may often reduce costs, such as trading fees and account management fees if you have a balance above a certain threshold. Still others may offer a certain number of commission-free trades for opening an account. Though many brokers have been racing recently to lower or eliminate commissions on trades, and ETFs offer index investing to everyone who can trade with a bare-bones brokerage account, all brokers have to make money from their customers one way or another. In most cases, your broker will charge a commission every time you trade stock, either through buying or selling. Trading fees range from the low end of $2 per trade but can be as high as $10 for some discount brokers. Some brokers charge no trade commissions at all, but they make up for it in other ways. Investing in stocks can be very costly if you hop into and out of positions frequently, especially with a small amount of money available to invest. If you want to purchase 5 different stocks at the same time, this is seen as 5 separate trades, and you will be charged for each one. If you were to fully invest the $1,000, your account would be reduced to $950 after trading costs. Should you sell these 5 stocks, you would once again incur the costs of the trades, which would be another $50. To make the round trip, buying and selling on these 5 stocks would cost you $100, or 10% of your initial deposit amount of $1,000. If you plan to trade frequently, check out our list of brokers for cost-conscious traders. Besides the trading fee to purchase a mutual fund, there are other costs associated with this type of investment. An investor will incur many fees when investing in mutual funds. One of the most important fees to consider is the management expense ratio, MER, which is charged by the management team each year based on the number of assets in the fund. You may see a number of sales charges called loads when you buy mutual funds. Check out your broker's list of no-load funds and no transaction fee funds if you want to avoid these extra charges. For the beginning investor, mutual fund fees are actually an advantage compared to commissions on stocks. Therefore, as long as you meet the minimum requirement to open an account, you can invest as little as $50 or $100 per month in a mutual fund. The term for this is called dollar cost averaging, DCA, and it can be a great way to start investing. In terms of diversification, the greatest difficulty in doing this will come from investments in stocks. As mentioned earlier, the costs of investing in a large number of stocks could be detrimental to the portfolio. There are a wide variety of trading simulators available, including those with and without fees. Stock market simulators offer users imaginary, virtual money to invest in a portfolio of stocks, options, ETFs, or other securities. These simulators typically track price movements of investments and, depending on the simulator, other notable considerations such as trading fees or dividend payouts. Investing is a commitment of resources now toward a future financial goal. There are many levels of risk, with certain asset classes and investment products inherently much riskier than others. You will also need to choose the broker with which you would like to open an account. The Wall Street Journal,